What's up, ladies and gents? This is Mike Headley, host of the Headley Group Real Estate Show. The podcast was designed to show business professionals who happens to have a license to sell real estate how you can make money outside of just selling a piece of property. We are talking to entrepreneurs that's making things happen. Continue to tune in. Hey, ladies and gents, we are back with another fabulous episode on the Headley Group Real Estate Show. Again, like I always say, that I keep it real and I be honest. Met this young lady here at InvestFest. Fabulous event, by the way. And I saw her engaging with people. So I went over and introduced myself, and we started talking about mortgages and talking about everything with real estate. And I said, you know something? I think the audience needs to hear exactly what you have to offer. And she said, sure, let me get on the show. So we want to give a warm welcome to a mortgage loan originator, and her name is Miss Keanna Leggett with the Nation's Lending. How you doing?
Hello. Thank you so much for having me.
Yes, we had to bring you on board because, again, from the conversation we had, we saw that. I noticed particularly, in our industry, we don't have the knowledge and the information as far as how to actually buy a piece of property in terms of with the lending side of it, right? Yeah. We've had other lenders on the show, but it's good to get different perspectives. Like we had different brokers on the show, and you might be able to speak, but not might, you will speak to the audience with all that great insight that you have.
Yes.
So Ms. Keanna, tell us, because we always go back to the source. You got into the game. What made Keanna say, I want to get into the mortgage game?
Well, I was working in insurance for about 4 years, specifically homeowners insurance. So I was dealing with a lot of first-time home buyers, a lot of investors, as well as a lot of lenders. And I love change. I love mixing up my flow, mixing up life. So I was like, well, I feel like I've exhausted all my options with insurance. Let's go ahead and move on to something else, but still dealing with homes, houses, things of that nature, that real estate market. I didn't want to dabble into being a real estate agent because, from what I knew at that time, you really had to hustle. Like you had to make someone want to buy a house or make someone want to list their house. And I was comfortable getting that standard paycheck. So I was like, well, let me go ahead and look into lending. I used to speak to a lot of lenders and they're like, oh yeah, we just sit behind the computer and make all the big bucks. I'm like, all right, great. Let me try that. I take the test. I realized that is not the case. The test was super, super hard. And then on top of that, I got into the business and I'm like, wow, if you want to be successful, you have to hustle just as much as an agent. You have to get out there and get your face out there. So being a lender is not for the weak. You don't just sit behind a computer desk if you want to be good. If you want to make some good money, you can't just sit behind a computer. You really got to get out there. So my experience in insurance kind of propelled me to become a mortgage loan officer. So that's interesting. You just said something there. I just want to unpack that. You said it's hard, right? It's tough to get in the mortgage. And I'll be honest with you. I thought, I thought it was pretty easy, right? Again, bad perception. And the reason why is because, again, I've always looked at it like it's always 25 real estate professionals to one lender, right? So it's an extremely competitive game on the real estate side. And if you have relationships with all these different real estate professionals, then you're getting a ton of business, right? But you said that's completely the opposite. No,
right?
That's not. Yes, because you don't want to just go to someone and say, give me a paycheck, give me your business, because that's not the name of the game. You have to put in some work, right? You have to get out there and actually talk to buyers. You have to market yourself on social media as a lender and educate people and prepare them for the home buying process. So that way you can go to agents and say, hey, listen, I have a buyer for you. You don't want to just come in this business asking people for their own business when they put in the work. You don't build relationships that way.
Well, oh wow. Let me tell you something. You said some wonderful things there, because I do think, and again, it's my opinion, I think mortgage professionals, they get into the business, and after a while, it becomes hey, you need me, right? Instead of a humility of, this is an exchange, this is a transaction, we do business together, right? So because again, I take my business down the street, like you just said a minute ago, right? So,
Right.
so how do you deal with one of the questions that, plus also I've experienced it, when you get in all this business, and I'm quite sure you have a team, but it's only one Keanna. How do you juggle all that? How do you juggle your buyers? Do you use a certain, when someone reaching out to, do they got to sign up on the platform, or you call them directly? Walk us through that.
So first, it starts within yourself, right? Making sure that you are setting boundaries for your business, for your work. When I came in this industry, I was very much like, oh, I'm available anytime that you need me, right? And yes, I'm available as far as the fact that I can communicate with you. I can shoot you a quick text. I can answer a quick phone call. But first, let's set those boundaries. And then on top of that, something that you just said, you're only as good as your team. I'm with Nations Lending, the McCartan Mortgage Group specifically here in Atlanta, and we have in-house financing. So we have close relationships with our processors, close relationships with our underwriters. They're just one call away, not just an email away, one phone call away. And then I also have a great loan officer assistant that I work with. And we have a great schedule. So making sure that you create those boundaries and getting on a great schedule and having a great team. That's super, super important.
You said something that I really like. And what I mean by what I like about that, you said in-house lending, right? So all the approval, it ain't got to get sent to Utah, then come back to California. None of that, right? Is that what you're saying?
Right,
so,
correct.
One of the great advantages to that I really like is because, again, you have, well, for those who's not into the business, and again, I'll let Ms. Keanna, hopefully you back me up on this if this is accurate. You don't supposed to deal with the underwriter at all, right? No one supposed to.
Correct.
So is the underwriter in-house or are they going as well?
No, and we have in-house financing. Yeah.
Wow, this is beautiful, because a lot of times, if you could tell the people what does actually the underwriter does, and I'm gonna piggyback off of that.
Well, the underwriter basically says yes or no. They give that approval. They say you can get this house or you can't get this house, or the steps that you need to take in order to get this house. And because we have that way, once you go under contract, it is smooth sailing from there. We take care of all of that up front. And
the reason why I asked her to elaborate on the underwriting piece of it, because again, the underwriter could be somewhere in San Francisco and you're in Georgia, and it's like, hey, wait for the underwriter to sign off on it, and then time zone, and it could delay with closes. But that's the beautiful thing. You said y'all are in-house. That's great.
Yeah.
Now, in the mortgage game, in the mortgage business, what I've known that some loan officers say, I'm only limited to this here. I'm only limited to first-time home buyers. Do you all specialize in refinance, or like, what do you do?
We have all types of programs for all types of buyers. So we have first-time home buyers, refinance, self-employed buyers. We have asset qualifier loans, investors, and things of that nature. As of lately, I've been working with a lot of self-employed buyers because since the pandemic, there's been a boom of entrepreneurs, right? Because people are just sitting at home trying to figure out what they're going to do to get that next paycheck. You know what I'm saying? So I've been counseling a lot of them. And if you are a self-employed buyer and you are trying to purchase a home, please do not claim so much on your taxes. You want to make sure that your business is profitable. If you made $100,000, don't claim $80,000. And now we only see that you made $20,000 this year for your business. I understand there's different reasons for people to do different things, but when it comes to purchasing a home, you want to make sure that you're a profitable business.
Well, AKA what she's saying, because I was a victim. I was guilty of doing that, right? Until my mortgage person. So what she's saying, she's being nice about it, right? But what she's saying is, listen, you don't want to pay all this money in taxes. So you want to do all these deductions and claims. So now you say, hey, Linda, I want to get approved for X. And they're like, well, your tax return says this. Well, I mean, but I make the money. Well, I know you make the money. I hear you. But I got to prove from your tax returns, right? So what about if someone has a profit and loss statement, a K1 statement? Does that play a role in anything?
Yes. I'd say don't, even if there's not so much profit, from your business, don't let that discourage you from getting a home. Come talk to me. We have different types of programs, 1099, bank statement loans, to where we're just simply looking at the residual income from your bank statements. We can do personal bank statement loans as well. So we have so many options. That's why I tell people, whenever they're just thinking about purchasing a home, give me a call. Speak to a lender, because you might have that thought, don't know where you're going to get all this money from. But say come next year, mentally you're ready, you go to a lender, but financially you're not there yet. If you spoke to me a year ago when you just had that thought, I could have educated you and I could have prepared you. So that way, a year from now, you're like, all right, let's get this ball rolling. Let's get this ball rolling.
Are you looking for a real estate brokerage to help you buy or sell your property? The Headley Group Realty is here to assist you with that process. We also hire brokers to join us and give them the best training and mentorship, leading to a great office atmosphere and an attractive commission structure. Our goal is to show homeownership at the highest professional level and empower the real estate business. If you're interested in buying or selling your property, visit www.theheadleygroup.com or call us at 336-904-6212.
Wow. So let me back it up a little bit. Tell us about, because again, we get a lot of investors watch the show as well.
Right.
Tell us about the bank statement loans, right? So I want to make sure I had this correct. You're not looking at no tax returns. You're just looking at the bank statements. Now, again, I don't want to speak for you because we hear the upside. Give us the glitches, the downside, if there are any. Tell us about that.
So with the bank statement loan, you want to make sure that, you have legitimate deposits coming in, and you're able to source them, and you're able to let us know, where every deposit is going to. With the home buying process, it's a very intimate conversation that I'm having with my clients, because we are looking at your finances, and we're looking at a lot of things that people don't even talk to their spouses about, so just making sure that you have a year-to-date profit and loss statement, you're staying on top of your CPA or accountant or whoever it is that does your taxes, you're able to source a lot of your deposits, and number one thing throughout this process is be as honest as possible with your lender. Look at me like I'm your attorney. Tell me everything. So that way I can go to bat for you and I can help you as much as possible. But I can't think of any downsides to getting a bank statement loan. I think that is super beneficial for our self-employed buyers because it's less paperwork that's required. Now, there are higher interest rates.
Okay.
There's higher interest rates associated with the bank statement loan, but the benefit is if we are getting to your goal, which is purchasing a home, in 2 years, you can refinance. And, once your documentation and your business and everything is all in order, you can refinance, get into a conventional loan, you know what I'm saying, and get a lower interest rate.
Okay. I like that. You mentioned sourcing the money, and again, we want to speak to our people sitting all the way in the back, right? And I know people are smart enough to realize that, but tell people about sourcing the money and season money, right? All of a sudden, you can't have, hey, this $10,000 in my bank account, just got it yesterday, right? Let's talk about that.
Yes. So when we're talking about seasoning the money, we're talking about making sure that the money is in the bank account in a certain time frame. Typically, for my company, it's 2 months, right? So say, for example, you're under contract, and next thing you know, we see that you have a $10,000 deposit in your account, and we're like, where is this coming from? You have to talk to me and let me know who that came from and why that's in your account. And if it's a situation to where you just deposited some cash in your account, we have to wait 2 months. So that way we don't have to ask too many questions. You know what I'm saying?
Gotcha.
And then on top of that, sourcing. So what I mean is just if you have a business, right? And say, for example, you do hair, and your clients pay you through Cash App. Okay, that's perfectly fine.
Mm-hmm.
You just have to let us know, and we have to
Mm-hmm.
have receipts and proof of that. I say get
Mm-hmm.
something a little bit more official, like PayPal, to
Mm-hmm.
where you can go back and get the documentation, and it will be easier for you to source where that money actually came from.
I like that. I like that. And now, when you just mentioned a minute ago, the money has to be seized a minimum of 2 months. Now, let the audience know: is this your company rules, or why do you do that? Why can't it be 2 weeks? Why got to be 2 months?
No, this is a standard rule.
Mm,
We just have to monitor your finances in a sense of, keep in
mm,
mind you're asking a bank essentially for
mm,
hundreds of thousands of dollars.
mhm,
So we need to know what's going on with your money because we want to know if anything happens, are you going to pay us back? Just think
mm,
about your cousin, right? Your cousin comes to you and say, I need $50,000. Okay, well, let me look at your bank account. And you see they don't
mm,
have any money or they're getting weird deposits. You're like, I don't
mm,
trust you to give me my
mm,
money back. It's all trust. Just think
Gotcha.
about it that way.
Okay, I like that. So I mean, so that's a great illustration. Now, what do you say to the investor who credit score is but they may be strong asset wise, right? Do y'all do anything similar to a what I'm cross collaboration, something like that? You familiar with that? You ever heard that term
So,
before?
yes, so we
Okay.
have an asset qualifier loan to where we can deplete your assets, stocks, and things like that, any additional money that's in your accounts.
Mm.
We do have different credit scores and things like that available, but I
Okay.
say definitely give me a call so that
Okay.
way I can review everything with you and see which program would be best for you.
Exactly, because one
Mhm.
shoe size does not fit all. It definitely makes sense. So you're
Yeah,
saying that you all have so many products that,
yes,
hey, listen, give me a call. That's you saying, call me. I'm gonna get you somewhere, right? So,
yes.
okay, go ahead.
One of my strong suits is problem solving. Like this is why
Mm,
I love being a lender because
okay.
I love it when people come to me and they just tell me their qualifications. This is what I do for a living, this is my credit score, this is how much money I have, this is how much money I'm working with. And then I go ahead and structure the loan according to your needs. I'm listening to you, you gotta
Mm,
trust me, and I'm gonna give you some options and I'm gonna let you decide which
mm,
is the best one. But
mm,
that's the name of the game. That's why I love being a loan officer. We have
mm.
we have so many things for our clients.
I like that.
Mhm.
And you all are only where? You just only in Georgia, or where you cover?
No, so the McCarty Mortgage Group is based in Atlanta, but we
Okay.
cover all 50 states.
Wow.
So wherever you're
Nice.
at, give me a call. I'd be happy to
Nice.
help you, prepare you, educate you, and get the
All
ball
right,
rolling, get
nice.
you in a house.
Okay, so we highlighted some good things. Now we got to pull curtains back. We got to pull
Okay.
we got to pull that carpet up under and
In
see
the
what's
nitty
going on.
gritty.
Nitty gritty. Give us the moment, or how do you handle when Lisa, John, Paul, Erica is not ready now, right? When you got to break that news. You can't qualify. How do you handle that? What does the McCarty Group does with that particular client?
So me personally, I set up a plan,
Okay.
right? So say for example, I have a client who has the credit,
Mm-hmm.
they have the income, they just don't have the savings right now at this moment.
Mm-hmm. Mm-hmm.
I set up a plan. I said, okay, well, what kind of expenses can we get rid of? What kind of
Mm-hmm.
expenses can we cut down?
Mm-hmm.
Do you have someone that's willing to help you out, give you a gift fund? Because that is possible. A lot of family members, when they find out a member of their family is getting their first home, they're willing to help out, contribute a bunch of money, things like that.
Mm-hmm.
So that's what I do. I kind of hold their hand throughout the process. And my
Mm-hmm.
strong suit is follow up. So I'll follow up either 1 to 2 months, 3, 6 months, depending upon where you're at in the process, just to check in. I tell people I can't want it more than you want it. So I'll do my part and stay on you as much as I can. But you also have to do the legwork as well. Now, when I have a client that might not be credit ready, I do have a great credit repair consultant that I do work with.
Okay.
I send them a couple options because we know that the credit repair business can be a little tricky. But the gentlemen, the people that I do work with, very trustworthy individuals. And then also we have a credit simulator. So say for example, we can accept credit scores anywhere minimum 500. A lot of lenders can only accept minimum 580, but we can accept minimum 500. But if you're
Wow, that's
anywhere
good.
between 500 to 580, it's a 10% down payment.
Mhm.
So let's say you're at 570, right? And we need to get you to that 580 because you're like, I can't do 10%, but I can do 3.5. We can run a simulator and see what needs to be done to get you to that 580.
Nice.
So there's a lot of options.
Wow.
Me personally, I'm gonna hold your hand throughout the process.
Okay. I like that.
Mhm.
Is there 100% loans? Do they still exist? Are they coming back? Or
Well, 100% financing.
100% financing. I'm sorry.
Yes, 100% financing is there. I do that for my clients that are like, hey, I have the income. I just don't have as much money saved. I have a little bit saved. I don't want to put out as much right now, but I definitely don't mind paying it a little bit later on. So we have down payment assistance programs that, you'll repay back over a 10-year period, or with some, you don't have to repay back at all. So down payment assistance programs are making a comeback.
And you have I'm gonna make sure I get this right. Conventional loans, is it 20, 30%, or is it 5 or 3%? Some conventional loans.
So for conventional, it can be as little as 3% if you're a first-time home buyer.
First-time home buyer.
Okay. Yeah, 20% if you want to avoid PMI insurance.
And what is PMI insurance?
Private mortgage insurance. Basically protects the lender if there were any foreclosure or anything of that nature.
So the lender say, I'm getting part of my money back, huh? Exactly.
So we're gonna get hundreds of thousands of dollars. We gotta get some protection too, and then on top of that is protection from us as well. So it's good protection in there.
Are you looking to join a winning team? Join us as a broker and receive high-level training, mentorship, and an awesome commission structure. If you're interested, visit www.theheadleygroup.com or call us at 336-904-6212. We look forward to partnering with you.
Now, currently, we kind of see what's going on with the power of social media. We see that African Americans are taking over home ownership, right? We are doing anything. Actually, I don't know if you saw it. It was a post that came out showing the appraisal.
Yes.
I think everybody, which is crazy.
Yes.
My question to you is that what is your take on us, meaning African Americans, as far as buying homes, home ownership, and the importance of home ownership?
So I will say that I had an experience very similar. I don't know, I can't, credit it to race, but I will say that when I was doing reverse mortgages earlier in my career, I had a client home appraised for, let's just say, $180,000. Okay. Then all of a sudden, FHA, sometimes you'll need a second appraisal, which is, routine, normal. So we did a second appraisal, and it came back at, I want to say, like $90,000 less. And that was a make or break moment in my client receiving the equity out of their home. Reverse mortgage is just a brief overview for older clients, typically that are on a fixed income, Social Security, disability, and they are, cash poor, equity rich, and they want to grab that equity out of their home. And that was a make or break moment for my client who really needed that equity to do things in her home, to pay for medical bills and things of that nature. So this is real. This situation is not a joke. It starts with education. Educate yourself. Talk to different people in the real estate industry, especially lenders, agents and things of that nature, who can tell you about the home buying process, and as well as educate you on guidelines and things of that nature. So educate yourselves. Own property, yes, 1,000%. Build that wealth through home ownership, and make sure you are educated. Don't just buy a home because people say it's a cool thing to do. Educate yourself.
Some Keanna, you're speaking with so much experience, but I just think you probably get a ton of business, right? Because one, you know what you're talking about, and you have a great company behind you who's literally guiding the client and not just putting them off to the side because they're not ready now. And I've experienced that myself, with some past clients I've had. If Keanna said, something, I had to talk to my old self and say, I would change this as I start my career, right? As I get into this mortgage game, what would you change, or would you keep everything the same?
I would keep everything the same. Even those moments where I'm like, oh my God, why is this happening? It's all a part of the lesson. Like we went to InvestFest, you heard Steve Harvey. He's like, there's a lesson in the blessing. And if I went throughout this process and it was just rainbows and gumdrops and it was an easy process, I wouldn't have learned anything. I wouldn't be experienced, and I wouldn't be able to handle adversity. So there's nothing that I would change. Now, if I was giving advice to someone who's starting out, I would say make sure that you join a team or a company that offers you support. Meaning that, you know, you have weekly trainings, that you're able to speak to all levels of management at any time. They have an open door policy. Make sure that you join a company that creates all your marketing for you. You don't have to do anything but get business. They will go ahead and do all of your marketing. Now, you should still market yourself on social media and things like that, but business cards, things like that, let them do that for you. And lastly, get a mentor. Find a mentor. In this industry, representation, especially for African Americans, is super, super important. And I feel like the McCartan Mortgage Group, my company, is really changing the name and face of that. So if you are a female or if you're a male that's African American, please, please, please check me out on social media. I'd be happy to just talk to you, not necessarily mentor you, but, you know, let you know things that go on in this industry and kind of prepare you for it.
Oh, well, Keanna, listen, you spoken from a person who knows what they're doing and has the experience. You got it, huh?
Listen, I'm the ringer, okay?
That's right. Keanna, listen, let me tell you, since you really enlightened us, you lightened the audience with so many. Let's see how quick this was. You gave us so many great jewels. Let me ask you something. Is there a question that you want to answer that I didn't even ask you? I love putting people on the spot with that one.
Right, I like it. No, not necessarily. It's just a shout out to lenders. You know, really get out there and grab your own business. You know, attend open houses, market yourself on social media, show your face. Like I was saying, the stigma with lenders was they sit behind a computer desk and they make all the big bucks. But the McCartan Mortgage Group is changing the face of lenders. We are putting on networking events. We have things like a seat at the table where we invite a bunch of real estate agents or real estate professionals in general. We talk about partnership, how we can work together and, you know, build business. I host a lot of home buying seminars. I have a few coming up. So it's very, very important that we connect with the buyers and we get our own business, because like I was saying, this is a very intimate process that you'll have with your client. You know, discussing finances that they don't talk about to their spouse or family or anyone else in the world, but they're talking to you and they're trusting you with a major investment. So super important that lenders get out there, show their face.
Keanna, we ask every guest to give us 2 golden nuggets, right? Whether that be a book, quote, scripture, something that inspires you, no matter what that is. Give us all. You gave us a lot before, but give us 2 golden nuggets. Go ahead and go.
First thing, don't take anything personal. There's no loyalty in business. I don't care how you flip it. There's no loyalty in business. Don't take anything personal. Just keep it moving. Second, practice self-love and wellness. Yes, it's all about the business. Yes, it's all about working, but practice self-love. I was looking at a video and it talked about self-love is not just loving your favorite traits of yourself, but it's giving yourself grace and telling yourself it's okay when things don't go your way. And in this industry, in the real estate industry, mortgage industry, not a lot of things are going to go your way. So practice self-love.
Like that, boy. Listen, I really do like, and you got to take time for yourself. It's like hitting the reset button. You got to recharge.
Yes.
Keanna, Miss Leggett, you have blessed the audience with your craftiness, your wittiness, as well as your experience.
Thank you.
And again, I would highly recommend reach out to her. My firm will partner with her as well, with her company, and see if we can get some good business going.
Of course.
Even though we're going to have your social media handles, go ahead and shout it out anyway.
Everyone follow me on Instagram at Mortgages by Keanna. That's Mortgages by Keanna. You can also check me out on Facebook at Keanna Leggett. That's KeannaLeggett.
I said, gang, this is Mike Headley on the Headley Group Real Estate Show. We'll see you all soon. Take care.
Hey, gang, I hope you really enjoyed that show. Our guests provide us some great tips and insight, and please support them on all social media platforms. And while I'm saying that, support us on all social media platforms. And don't forget, watch the entire video on YouTube. We'll see you next time.